Day trading versus swing trading. What's the difference between the two and which one is the right one for you as a trader? First, let's start with day trading. Day trading is typically defined as this buying and selling of any individual given asset throughout the same day. Now, with that being said, there are actually a bunch of different types of day trading itself. In day trading, there are what is called day trading, and what I personally do, which is I like to aim for larger moves. Most of my trades take place and last anywhere from 30 minutes to an hour to 45 minutes, sometimes all day long. Sometimes I'll enter something within the first hour of the day and sell it at the very end of the day, right before market close. That is what I personally would consider day trading as a whole. Now, within that niche, there is one more specific category known as scalping, right? Scalping typically involves very quick buying and selling. A scalp would traditionally be 30 seconds, 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes at the most. A scalp is typically speaking a rather short-term trade. Now, within those two, scalping versus day trading, again, both of them falling under that larger definition of day trading itself, right? The main difference between the two is the length of time in which you hold that trade. Both of them have their pros and cons. Scalping, you typically have a little bit of a higher win rate than you may have in day trading, but your risk to reward ratio is lower. Between the two, I personally choose to stick more with longer day trades, more intraday trades, because I like to capture the full move. I found that when I was trading and I would take scalp or very short-term trades, eventually what would happen is I would take a very short-term trade and that trade would continue running in deep profit without me. For me personally, that gave me a whole lot of FOMO and gave me some psychological trading issues. I wasn't good at how I handled that trade moving without me. So what I personally decided to do was find a system and start building my own trading style that allowed me to hold for the larger moves. So again, that larger umbrella of day trading, fitting under it, we have day trading, which would be more intraday, longer trades, and scalping, which are the very short-term quick trades. Point A to point B to point C, you are in and you are out, as well as the differences between those two, typically from a risk perspective, right? Now, branching on from day trading, there is actually also another type of trading out there known as swing trading. And much like the difference between scalping and day trading, the difference between day trading and swing trading comes with the time horizon in which you are holding that position. Day trading refers to any type of trade that you are in and out of that individual given day. A swing trade, by definition, refers to any type of trade that you hold for more than one day before closing it. Now, much like day trading, there are different subsections, so to speak, of swing trading that you could be aware of. First, for me, I actually consider myself a day trader, but I do swing trade on a frequent basis. It's just short-term swing trades. I consider these weekly swing trades, aka I'm looking to swing a weekly expiration option overnight from one night into the next day and most likely exit most of it that next day, right? For me, my type of swing trading that I do is still relatively short-term. It just does involve the process of holding a position overnight. And that's really where the key difference between day and swing trading is. If you're day trading, you are in and out of that position before market close. Whatever happens overnight or in the after-hours session, whether a world war breaks out, whether we lose power, whether world hunger goes crazy, whatever the case may be, if you're a day trader, you don't have to worry about any of that. As a swing trader, even if you are holding a position for just one night, you open yourself up to what we define as gap risk, aka whatever position you are in could theoretically gap against you and work against you so far badly before you even have a chance to close it when the market opens. So one of the first things that you need to have through your head to become a successful trader as a whole, but especially swing trader, is that any swing trade you take does have the possibility of waking up at zero the next day, given the way that markets and securities work, right? Now, this will vary based on the asset that you trade. If you're swing trading shares of Apple stock, I have a feeling that you are not going to wake up to Apple going bankrupt. However, if you are trading Apple weekly options, you could open up the next day to one piece of bad news that could put your options at zero, right? So you do have to accept that certain level of risk no matter what category of swing trading you fall into. Personally, again, I like to fall into that 1 to 2 day type of swing category where I'm using hourly and daily charts to identify opportunities where I think I can purchase something before market close, and then the next day at market open, ideally have that trade be already working in my favor, right? Now, 1 day and overnight swing trades using weekly options are definitely not the only type of swing trades out there. You could also take swing trades using shares or using monthly expiration options that have more time on them that will be significantly less volatile, aka significantly less stressful. So swing trading as a whole can also refer to a time horizon where you are holding a trade from 3 days all the way up to 6 months, 9 months, a year. It does not matter, right? Swing trading can theoretically last. However, with swing trading, the thought process behind it is that you do have a target and that you do intend to close that position at some point, wherever that might be. It might be 6 months down the line. It might be 9 months down the line. It might be a year down the line. It might be a week or a day down the line. But as a swing trader, the expectation is once that trade hits its target, you will close it, right? Now, the one that I did not mention that gets brought into this after we know that a swing trader has intentions of closing their position is position traders, aka long-term investors, right? Long-term investors, the difference between that and swing trading would be that you are purchasing an asset with the intention to hold it for the long term. It doesn't mean that you'll hold it for your entire life. For whatever reason, you might decide to sell it at a later date. But when you are purchasing that equity or that ETF or whatever the case may be, your intention is to hold it for the long term. You have no time horizon on when you might close that position or no price target in mind. If you had a price target in mind, in my opinion, that would more fall under the category of swing trading, right? Well, now that we've defined day trading, swing trading, and position or long-term investing, which one is right for you? First, I'll go ahead and say that long-term investing is right for everybody. Literally, if you are watching this video, you should be long-term investing. I don't care whether it's $5 a month, if that's the most you can afford right now, or if it's $500 a day. Every single one of you should be long-term investing into a Roth IRA and an additional long-term investing account so that you can build a portfolio of companies that can carry you to generational wealth later on down the years. The simplest way to get rich in the stock market is simply buy stocks when they are down, as long as you pick good companies. I'll do a separate video on my favorite companies to invest in. However, the safest route to go is stick with the SPY ETF or the VOO ETF. And generally speaking, over the course of a 10, 30-year timeline, you will be profitable on your long-term investments. However, most of us aren't looking to get rich over the course of 10 to 30 years. We're looking to increase our worth significantly earlier on, which brings me to the question, which should you focus on, day trading or swing trading? Now, personally, I like to do a little bit of hybrid of both. I would consider myself primarily a day trader, but I do take those overnight swing trades that ultimately cause me to capture some really nice profits. My largest trade of all time to date was one that started as a day trade. I added and rotated into a swing trade and was able to realize over $240,000 in one trade. My biggest trade to date was a combination of both. So you can't go wrong going with both. The real question when you're deciding whether you're day or swing trading comes from those of you who work 9-to-5 jobs and your availability towards the market. If you are free for that first hour of market open, then I would definitely recommend you look into day trading, as that first hour is typically volatile and typically offers a lot of high quality trade opportunities that you can capitalize on in just that first hour, right? If you are someone who's limited to the first 30 minutes or so of market open, you could potentially look to scalp trade. But one thing that I would look into would be more swing trading. I would look into taking your trades based off a longer time horizon, looking for trades that you might hold for 2, 3 weeks, a month, 4 months, whatever the case may be. That way you don't have to actively watch them every single day while you're at work feeling so anxious, trying to trade off the phone while your boss doesn't see you, whatever the case may be, right? So when you're deciding whether or not you should be a day or swing trader, the first thing you need to do, ask yourself is, what works best with my current life schedule? Whether that be the relationships that you're in, whether that be the jobs that you're working, whether that be the baby that is crying and keeping you up at 2 a.m. It doesn't matter. Whatever is aligned with your particular schedule is the first thing that will dictate which type of trader you are, day or swing trader. The second thing that you need to figure out is what style works best for you mentally. I have a ton of students out there who really struggle to hold positions overnight. Having that gap risk that we talked about earlier on in the video puts on too much anxiety for them, and they never end up managing their positions well. They always oversize, they don't trade them the right way, they don't manage their winners the right way. Whatever the case may be, they don't do well with swing trading. So they set a firm rule for themselves that they only trade positions intraday as the market is open. I then have countless students on the other side that think that trading during market hours, especially the first hour, it just moves a little too fast for them and how that they're able to operate the strategy. And so what they choose to do is lengthen their time horizon, look at longer time frame charts, and rotate into more 2, 3, 5-day swings that could potentially last them up to a month before closing that position. The reality is that there's no right answer, and you need to figure out what works best for you, both with your schedule and with your ability to handle the emotions that come along with trading. So with that, my friends, I hope you'd enjoyed this video. I'm curious, let me know down in the comments, are you a day trader or are you a swing trader? Which one do you prefer, and why are you so against the other side? I hope you all enjoyed this video, and I'll see you in the next one. Cheers.